Hello, YouTube. Welcome back to another episode here of Archer Investing. Today's episode is going to be another portfolio update. Not feel like, but it's actually been, I think, almost 2 weeks since my last video. So I've been kind of lagging it in terms of uploading videos. So yeah, without further ado, let's get to it. So there's been a lot of changes in my portfolio. As you can see, I finally hit my 100K goal a lot earlier than I thought I would. I was thinking I was going to hit this goal maybe end of 2026, but it had some pretty good news coming out with one of my stocks that really skyrocketed my investment portfolio. So yeah, just want to give you guys not a few updates, but a lot of updates, just because the portfolio has changed a lot, and I thought this would be a good time to also talk about my Roth IRA. I never really talked about my Roth IRA investments, just kind of skimmed over of like how much I had in my Roth, as you can see here. But I thought this video would be a good one for that too, just because it's going to be a lot of updates. So yeah, without further ado, let's get to the portfolio. I think I already said that. But yeah, so portfolio is looking very nice. I hit my 100K goal. I do expect this to go down under the 100K mark. But the portfolio is sitting at $101,298.11. I'm very happy about that. Portfolio is up 15.37 today. $13,459.17 in one day. And then, I'll show you guys what stock really made that jump. 1 week out, up 11.61%. 1 month out, up 39.58%. 3 months out, up 32.88%. Year to date, up 32.12% for a total of $24,617.88. That's looking pretty nice. 1 year out, up 108% for a total of $52,678.61. And just a quick note, last year I was depositing. I was withdrawing a decent amount of money from my portfolio along the way. So this percentage value is probably lower, maybe just under the 100% mark, but that's just a little thing right there. And then all time, I'm up 48.47%, which I think is still pretty good considering I was not investing in this whole time period right here. That's a pretty good amount of time. But yeah, buying power, not a lot of buying power, sitting at $615.90. But it gets where a little weird right here. Technically in cash, I have $26,076.44. Margin total, $45,289. Options and collateral. As you'll see in my options, I am selling a lot of sell puts just because there is a lot of stocks that I either swing trade or want to get into that are pretty discounted right now. And then for margin buffer, 18.72%. I could always make defensive plays on my options to make this buffer a lot higher. And plus, I could always add money as well. But margin use, still not using any margin technically. Margin available, $615. It's a little weird how it works because my buying power is $615, but I have $26,000 in cash. But, oh well. So options, I have MSTR right here. 170 call. I'm currently up, only $2. This one expires, I'm having a brain fart right now. Expires May 8th, so a little less than 2 weeks. I don't think MSTR will be up to 170 again, but who knows? If it does, I could always roll it out. No biggie. Irene, $51 call. This used to be a $55 call, and then I decided to roll it down just because Irene has been taking a big hit lately, and I wanted to collect more premium, so that's what I did. So a short call roll right here from 55 to 51 for a total of $68 in premium. SoFi took a big hit today. They met expectations on earnings. A lot of people didn't like that. So a little history with SoFi. SoFi has a pretty good history of beating expectations every time. And for some reason, every time it beats expectations, the stock just plummets. What happens is usually the stock will start going up during earnings, and then when earnings comes out, SoFi just takes a dump, and this is what happened here. But I think this one might have been worse just because they met expectations. They had some strong growth, but a lot of people, thought that they were going to do really, really good. And I did do a call play that I'll show you guys later with SoFi, just because I did think that SoFi was already kind of beaten down. And I was wrong, so I actually took some losses on that, so I'll show you guys that later. And then I usually don't buy calls. Well, I guess I technically do because I buy leaps. But I usually don't buy calls a month out. And this SoFi play was a call that was a month out. Took a loss, but I had something else that made up for it. But I decided to also sell some SoFi puts just in case, SoFi goes to 14.50. That's a good position to get in. And then I have another one here at $15 put to get into SoFi as well. I also did buy SoFi on the dip. Coinbase right here, 170 put. I'm currently up $77 on this position. This is more like a wheel strategy play here. If I get assigned, I'll sell a call right away. And if I don't get assigned, I'll sell another put. And then go from there. Irene, $38 put. $38 put on Irene. This one, I'm down $13. Pretty much the same thing as the Coinbase one. Hood, $70 put. Robinhood did not meet expectations on their earnings and plummeted as well. So I thought I should sell some puts on Robinhood because I do want to get into it. I missed the boat when it was at like $65 earlier this year. And then it went up to, I think it was close to 90 maybe. I do like Robinhood, obviously, because I am using the Robinhood app. I do have the Robinhood Gold card as well in terms of credit. 3% cash back on everything is pretty nice. But right now, I'm down 15.3% for a total of $50 in this position. But that's okay. $70 is not a bad entry point, in my opinion. MSTR, $185 call. This one expires May 22nd, I believe. Yeah, May 22nd. I am up $225 on this position for a total of 38.14%. And then I might do the same thing as the Irene one. I might roll this option down depending how it goes on next week, just to collect a little bit more premium. I'm not going to roll it down a lot to like 170 or anything like that. I'll just like roll it down to like 180. 177 or something at the very least. Irene, $40 put. This one, I am down 23.88%. Irene has been taking a hit this whole week. It went down to like 42. I think it went back up to 44. And then we'll see where it's at now. So that's another one. And I have another Irene put. This one, I am down $20. And I believe this one's the one that I've been having already in my portfolio. But I might be wrong. And then these 8 contracts on Irene, $40 puts as well. And if Irene continues to go down, I could always roll this position out and then down. Could probably do like a 35 put expiring, not December, but maybe like 2027, somewhere around there. So I could always do that as a play. SoFi, $15 2 buys. Still having this position. I'm down 20% even on this position for a total of $190. Just going to keep holding on to this SoFi Elite position right here, as well as this SoFi $20 call 5 contracts position right here that expires June 17, 2027. Down $904 for this on this position for a total of 36.47%. Yeah, SoFi hasn't been doing good this year. Had a little bit of recovery, but right now it's back down. But that's okay. That's a good buying opportunity. SPY. I've been averaging, I think, $5 a day. Yeah, $5 a day on SPY. And then QQQ, same thing. $5 a day as well. JEPQ, almost 6 shares. Currently have 5.96 shares. Nothing there. JEPI, 1.56 shares. Not much of an update there. So not really much of an update for my ETFs, as well as Coca-Cola right here. Just that I'm not almost, but I'm halfway at one share. And I think I am buying at $5 a day on Coca-Cola. And then Coca-Cola has some strong earnings this week as well, so that's been up. SoFi. So here's SoFi. SoFi had earnings before the market opened, and it just took a dump. So as you can see here, it was at 18, almost $19 per share, and it fell down 15.44% for a total of $2.83. And then it looks like it just recovered a tiny bit over the overnight market. But I thought this was a good buying opportunity in SoFi. So I bought a really good amount of shares, honestly. So I went from 550 to 1,000 shares of SoFi right here. Currently down 6.31% for a total of $1,061. My average cost is $16.84. My plan with this position is I'm not going to sell calls on this position on all of my 1,000 shares. The only time I will do that is let's say SoFi just starts skyrocketing. Then I'll wait maybe a little bit and then start selling calls on all of my shares. But I think the plan is I'll probably sell I'll show you guys here. For example, let's say it just shoots up, right? I'll probably sell like a call at 17, maybe 2 calls at 18, and then if it continues to go up, I'll sell another call at 19, and just keep just keep collecting more and more premium along the way like that. That way, only some of the SoFi shares get called, and that way I don't miss on any more potential profit I could make on the upside, instead of just selling like 1,000 shares on like $17 calls or something like that. Yeah, because I feel like I have missed opportunities just because me going all in on the selling calls and not holding some of the contracts back until I see some more upside. But yeah, that makes up about 15.71% of my portfolio right there. And here's the winner right here. So this stock has recently experienced elevated volatility. So Visa had earnings yesterday after market, and what I remember before I went to bed, it was like at 323, 324, and then I woke up and it went to like 332, 336. It even touched 340. I think it was at 342 maybe, but it was just so volatile. And yeah, so this is this is like the main reason why my portfolio just skyrocketed. Had some really strong earnings this morning, or I guess yesterday. I have a total of 28 shares, market value of $9,359. This is 9.32% of my portfolio with the average cost of $308.27. I am up 8% flat total return for a total of $693. And I feel like I should talk about this just because I'm talking about Visa right now. But if you look at here, I don't know if you noticed, but if you've been following me, you would notice that I don't have my Visa calls anymore. And that is because I sold them because of the earnings, how I said I would. So if you go here, so first things first, that $19 call for SoFi was the call I made that I lost on. So I lost $755. But, you win some, you lose some. And here I sold my 335 calls for Visa. I spent $21,588 to open these 9 contracts on average for $23.99. And then I sold them and made a profit of $9,147 for a 42.38% gain. I think I sold it when it was like at 39, I want to say like 39.70 or something like that. It just kept going up and down, so I'm not 100% sure where exactly I sold it. I probably missed on a little bit of upside because it did reach 341, 342. But, some profit is better than no profit. I decided to take profit right there just because, I had a gut feeling that it was going to consolidate down just because it was moving a lot to the upside in the morning. So I decided to sell, and I made a really, really nice profit. And literally, Visa is the reason why my portfolio hit the 100K mark. And that's only $9,000 right there, right? But I also sold calls that expired May 22nd, 2 contracts, and made a realized profit of $3,715. But the percent return here is 192.99%. I literally more than doubled the money that I put into this position. You know, I really believed in Visa and SoFi, but SoFi, you know, it is what it is. And that's literally why I made these 2 calls right here. I was just very confident in it, you know, and made a nice profit. So in all in all, I made over $12,000 just on SoFi itself. I was thinking about maybe doing poor man covered calls on the 9 contracts and just holding them, maybe collect more upside. But I just decided not to. I just decided just to take the profit. And then maybe if Visa takes another dip down, then I'll probably buy another leap, not expiring on this day, but further out. And then sell some poor man covered calls. But yeah, this is the main reason why my portfolio really skyrocketed. Visa really came through. I know I've mentioned before that, you know, I like the company and everything, and it did really come through. I didn't expect it to jump to 340 though on the overnight, you know, because when I went to bed, it was like 324, 325, whatever. And then next thing you know, it's 332, 337. So yeah, pretty nice gain right there. I'm very happy with that. Speaking of nice gains, Amazon also had some pretty good earnings. Amazon was being very volatile though. At one point, it went down to 350. It went down to 250 and then just shot back up. I got a notification saying that Amazon was below 250 because it was like down 5%. And then I go on the app literally like 2 seconds later, and it's like at 259, 260, and it's just going up and down, up and down. It was pretty crazy, but I did buy a little bit more shares of Amazon. I bought 5 more shares at 257. I was trying to catch that dip, but it was just very volatile. And then my daily reinvestments into Amazon, $4 a day. But yeah, Amazon is 3% flat of my portfolio diversity. I wish it was higher, but it's okay. Market value of $3,011. Average cost of $230.60. I am up 16.47% for a total of $426.01. So yeah, Amazon has been pretty volatile, but it's not the only stock that's been pretty volatile. A lot of these stocks have been pretty volatile, honestly. You know, this week has been a lot of big boys with earnings. You know, Amazon, Visa, Microsoft, and American Express right here. I also bought more shares as well. Damn, that dividend's still pending. That's crazy. But I have 27 shares of American Express with the average cost of $318.05. This makes up 8.54% of my portfolio diversity, a market value of $8,582.80. I am down 1% for a total return of minus $102. And then I bought 10 shares at $315. And American Express was kind of volatile today too. It was jumping kind of all over the place as well, but not as bad as some other ones. UNH has just been really good to me. $368.28, up 1% just today. I have 7 shares, almost 8 shares-ish, with an average cost of $289.89. This is 2.86% of my portfolio diversity, a market value of $2,871. I am up 27.04% for a total of $611. And I don't think I bought any shares of UNH. I'm just dollar cost averaging into this position as well. DRS, just dollar cost averaging into this position as well. $3 a day. Not really much of an update. It's been going on a downtrend this past week. If it goes down to like $38, I will buy probably like 5 shares, 10 shares, or something like that. MSTR. MSTR was going rampant last week. It was up to like 181, maybe even more. 181 last week. My call positions were getting wrecked. I had to roll out in some of them, and then I kind of bit the bullet on one of them, and I guess in the way it paid off, but then didn't, because my MSTR investments did lose value. But I'm still in the green in this position. I am up $2,336. I have 200 shares with the average cost of $147.54. Market value of $31,878. This is my biggest position in my portfolio with 31.71%. I haven't been buying any MSTR. This is what it's going to be. I'm going to just keep it at that for a while. And then my plan is to just sell calls on it. I'm not going to sell any calls right now just because I already have calls. I might roll them down, but I will wait for another little mini bull run if it has one before I sell another call. Microsoft 419, and you can even tell here it's just been very volatile after market, going to 435 and then went back down to 418, then back up to like 432. But yeah, Microsoft had earnings today as well on the aftermarket. I have 12 shares, average cost of $389.53, market value of $5,075.18. This is a little over 5% of my portfolio. I am up 7.69% for a total of $361.81. I am buying $5 of Microsoft every day. And I think I bought some shares today. Yeah, I bought one share of Microsoft for $14.86. Irene, just been selling calls in this position. It's been very volatile. I've been on the uptrend last week, and then it just took a dump. Just going to keep holding this position, keep selling calls, and then making some good money off of that. I'm still currently up 6.39%, still up $262, so that's nice. Netflix, I have 15 shares of Netflix. This is more of a swing trade. Not really looking to hold this just to make a quick profit. I am down 4% on this position. It's only about 1% of my portfolio. Oracle, same thing with Oracle. I believe it was OpenAI that had earnings, and Oracle, I think the story is like Oracle's invested in OpenAI, and since they had bad earnings, it really affected Oracle, and that's why Oracle is down. I decided just to put 5 shares. It's part of the reason why I just add like a little bit of shares at times is just because it helps me keep watch of the stock. Even though I could do like a whole watch list and everything, it just helps me with that. So same thing with Netflix. This is going to be kind of a swing trade as well. So only bought 5 shares of that. Coinbase as well, swing trade. I do have a sell put in this position, so this will be like a swing trade / wheel strategy here. I have 2 shares, up only about $5.91. Also down 6.38% today. That was just a good time to get in. But yeah, my portfolio has changed a lot. A lot of volatility this week and last week. Last week was with MSTR mostly. I think it was also American Express. This week we have Amazon, Visa, MSTR again, Irene, Microsoft, all of them just going up and down. Things like 3 up, 3 down. I don't remember. It's 1, 2. Well, like 2 of them are up and 4 of them are down. And I really thought Microsoft was gonna go up just because it kept going up to like 430s, but it didn't. But yeah, man, just wanted to give you guys an update. If you like these type of videos, please like and subscribe. I will be more adamant about updating weekly. Just been kind of busy with everything. But yeah, I'll see you guys on the next one.